Hi, I'm Nancy Dykeman with RE/MAX Premier Realty, and I'm here today with Scott Shannon from NRL Mortgage, and we are getting asked a lot, is this a real estate bubble? Are we in a real estate bubble, and are we going to have a crash in 2021 or even 2022 because of what's happening now in the mortgage and real estate market? But what do you hear about? I hear, other people saying there's too many people in forbearance right now because the people that were hurt with their jobs, the
Yeah.
same people that you mentioned, the hospitality industry,
Yeah.
the restaurant industry,
Yeah.
the nail techs, hair salons, those type of people who are now in forbearance.
Yeah.
Now we're told that, there's like a million people in
Yeah.
forbearance,
About a
but
million people. Yeah.
but their houses are worth more than they were then,
Right.
right? Their houses are worth
They should
more.
be.
Does that make a
They
difference?
should be. I mean, obviously it's a national market, so I'm sure
Right.
there's pockets where they're not, but I'd say in general, most of them are up.
Right.
Right.
What do you
So,
think's going to happen there with
well,
forbearances?
I think three possibilities, okay? People who went into forbearance, I hope understood what that meant. It meant that they weren't forgiving your loan payment, they were deferring your loan payment, okay? So the first expectation is that when they come out of forbearance, that there's somehow, way, shape, or form going to be able to pay back the unpaid balance of their loan up to
Right.
that point. I also think people who are coming close to getting out of forbearance and want to keep their home need to contact their lenders and start. And I'm not going to lie, from what I've heard, it is a bit of an uphill battle because you have to call and call. They're understaffed because of the number. This
Now,
happened back in the
that
foreclosure day.
sounds like the foreclosure market before.
I know. And so what they really need to do to protect themselves is call and call because the feds have put out a lot of criteria basically instructing the banks that in the situation, now this is the big difference. If you went into forbearance just because, you thought I can go 6 months and not have to make a mortgage payment, right? Then I hate to say it, but you're horribly misinformed. But if you did it for real, oh my God, I can't make my payment reasons, okay, then you probably will be able to get a loan modification.
Right.
And a loan modification, and this is why this is going to be time consuming, actually requires a new recorded document because they're taking your old mortgage, which says you're going to make X payment for X amount of time and it's going to be paid in full by X date. So now that is being adjusted.
Right.
So now think about that from a lending standpoint. You have a million people, let's say even 500,000 of them need this mortgage modification. You've got 500,000 homes that need to have another, almost like a miniature closing, and a
Right.
new document recorded in
Right.
all these county clerk's offices across the country.
Right.
And that all takes time, energy, and frankly, a lot of patience for the client. And then thirdly, the other half who may end up having to sell, the good news is they shouldn't have any lates on their credit. And if they're coming to the end of their forbearance period that was allowed by their lender, if they don't think that they can hit the criteria that for a modification, they need to get their house on the market right away.
Okay.
Because then they can at least sell it, probably get a little bit of money,
Good point.
and buy something else.
Good point.
You know.
Now, if they are in forbearance currently, they cannot go buy another home.
No, they'll have to wait, I believe it's 6 months.
6
So
months.
if they were to sell, don't quote me on this, I can check into it later and get you another answer, but they would have to sell, they probably rent for 6 months to a year, and then they could buy again.
Okay.
As long as they weren't showing all these lates and things on their credit on a
Right.
mortgage.
Right.
As long as they didn't beat up their
Okay.
credit.
So you would highly recommend if somebody does not need a forbearance, don't let the mortgage company talk you into it.
You're right. And the mortgage companies really shouldn't be talking you into it because they don't want you to do it. But they, I would certainly say, avoid it at all costs.
Yeah.
It really is something that should be there for. I lost my job. I have no prospects of another job. I have no idea how I'm going to pay, but I still need to put a roof over myself and my family's head.
Right.
And it wasn't anybody's fault. Let's be
No,
honest.
no, it's not.
Those people who were really truly affected, I don't blame them. I would be doing the same thing if we had that negative impact to our
Absolutely.
business.
Absolutely.
I'd be just doing everything to protect my family.
Right.
It's the folks, the bad actors, in my opinion, that just took it thinking it was a free money, and those are the ones who you're going to see possibly get foreclosed on.
Yeah. Or they could go ahead and sell their home.
Or they could go ahead and sell their home.
And save themselves from a foreclosure, which stays on your credit report for a long number of years.
Exactly. You end up with a foreclosure. You can't, the minimum time frame to get another home is 3 years on an FHA loan.
Yeah. And what on a conventional?
Conventional 7.
7 years.
Yeah. Unless you roll it into a bankruptcy.
So the best thing to do would then be, if you can't get yourself out of it, to sell your home.
Yeah, especially if you have equity in it.
Right.
I mean, why wouldn't you?
Right.
You know?
Exactly. Yeah, because if you have equity, you're going to lose all that equity in foreclosure.
Yeah.
Now, what about the people that are going FHA and VA because that's the way they need to go to get into a home? Now, are you seeing them lose out in multiple offer situations? We are. What are you seeing?
I have heard that.
Yeah.
I have heard that. I personally think in our market that VA, for instance, should not be getting the rap it's getting. VA is the safest, most secure, most on-time paid loan of all loans out there. Veterans do not want to lose their benefits.
Right.
If they don't make their mortgage payment or have a foreclosure or something negative happen, they will lose a portion or if not all their VA benefits to purchase home loans. So that's why VA loans in general are the best performing loans over history.
Good
a lot of people don't know that.
No.
And so I think there's a lot of negative connotation with it because as a lender, there is some very finite details to a VA loan. And I have seen other lenders who aren't as well educated, loan officers and things who aren't as well educated about the little nuances that you can do with a VA loan, where they fall through because they weren't properly executed.
Okay.
With us, we're the VA savers. I mean, I can't, probably last year alone, we saved 50 plus VA loans that were turned down by other lenders, including some of the big ones you'd never think of, like the named military lenders, which is shocking to me. You'd think they'd be real good at them, but nope, they are some of the worst in fact. Yeah.
So what we see with the realtors and with the sellers is we've got 6 offers on the table.
Sure.
And 2 are cash.
Yeah.
And one is VA and one is FHA and one's conventional and one is, I don't know. I have to come up with
Who knows? Bank statement loan.
Yeah, bank
private
statement loan.
Yeah, some private loan. Yeah.
So they've all of the ones have pre-qual letters.
Sure.
But the realtors and the sellers are gravitating to the cash.
Yeah.
Or gravitating to the conventional with the most money down.
Sure.
But that is not necessarily the safest thing for the seller.
Not necessarily. I mean, I've seen people get turned down for a conventional just as easy as FHA or VA. Really what it comes down to, in my opinion, is it's just like any transaction you're dealing with. You're only as good as the professional you're working with.
Right.
Okay? And so with our shop, I mean, we have like a 99.8% pre-qualification to closing ratio. Like, we are very strict about who will take on. Now, I have, in fairness, because we're a little bit, more picky, and we want to make sure 100% when we say yes that they can take that to the bank and they're going to get their house. I have had a couple instances where we said no, they went somewhere else, and somewhere else was able to do it. But for a reputational standpoint, I'm not willing to roll the dice. If it's a maybe, I'm not going to put my name on a piece of paper, send one of your agents, Nancy, out for 2 weekends trying to find somebody a house, and then it all fall through because we didn't really do our homework. You know what I mean? So I think the negative connotation is that FHA and VA in general tend to be a little bit tougher clients to get done, especially the FHA, okay, and the USDA. They tend to be a little bit more tougher clients to get done. So if you're dealing with a loan officer who may not be as experienced or it's almost like a big chess game. You got to see the moves that you have to make 5 moves ahead of time. You know what I mean? Like, okay, I got to do this, you got to do that, you got to do this. You can literally set yourself up for failure by not knowing that and not having enough experience, right?
Okay.
So that's, I think, where FHA, especially in USDA, get a bad rap, because there are lenders out there that go, oh, it looks like your income's good. Oh, it looks like your asset's good. Here's your pre-qual letter. Go find a house. You know, when really there's a couple deeper questions they should have asked, and they would have found out there was a big smoldering volcano of problems underneath the surface that they were unaware of, that they should have been aware of. You know what I mean? And then they don't find out until halfway through the process or at the very last minute, which was when we see a lot of these get turned down.
Are you still seeing FHA buyers get homes?
Yeah.
I mean, they're still getting homes, so they're not getting shut out.
Nope.
Or VA buyers. Okay, that's
not
good.
so much. And you know, in our shop too, we'll always call a listing agent and we'll plead our case for our client.
Right.
You know, and we also will do full loan approvals in our shop where we actually get the loan completely underwritten up front.
Let's talk about that before we close. What's
Sure.
a full loan approval before they even find a house?
Right. Okay. So there's a couple different. I've seen 3 different versions of this. Okay. Well, obviously we know what a pre-qual is. Pre-qual is you give us your information, maybe a couple documents, but not much. It's a loan officer reviewed loan, and based on the loan officer's education and opinion, they say, "Yep, you should be good. Here's your pre-qual letter."
That's a pre-qual.
Okay. Then you have a pre-approval. Now, some lenders I've seen do pre-approvals, and all they're doing is getting the basic information and running it through the underwriting system. And then that underwriting system says, yep, you're good, but they're not actually verifying it through the documents or having an underwrite. Right, with no real, it's just the information they receive from the client verbally or through an internet loan application, whatever.
That's got holes in it.
Big holes, big, huge holes. And they say, well, it ran through and it said approved, so we're good. I don't think that's proper. I think the proper way to do it is to get a full loan approval. First of all, you cannot call up a lender on a Saturday afternoon while you're out with that client and wanting to put an offer in and get a full loan approval.
Right.
You need to be proactive. If you have a client like that that really needs a full loan approval or you're concerned about it, then it needs to be probably at least about a 2-week lead time before you're out showing them houses to get that pre-approval. And so we would take the loan application, we get all their income and asset documents and any other supplemental documents we might need, and we actually put that data in front of our underwriter before they're under contract on a house. And then in theory, all we should need once they're under contract is the appraisal, because obviously we can't do that until we know what they're buying, the title work, the homeowner's insurance policy, and maybe an updated pay stub or maybe an updated bank statement. So it very much limits, number one, it makes it smoother for the client. They're much happier because people are stressed out during that home buying process. We like taking that stress and putting it on the front end when there is no stress, right? And then it also makes this process smoother. The sellers seem a lot happier. We get clear to closes a lot faster. So we like to do those as often as we can. But a lot of times clients just don't truly grasp the power that is. And I think as time goes on and these multiple offers become more frequent, these loan approvals are going to become more frequent.
Okay, very good. Well, thank you, Scott. Thank you for your time
today.
We really
great talking with you.
We appreciate the service that you give to our agents.
Absolutely, and we love working with you guys. So anything we can ever do to help, you just let me know.
Great. Thank you so much.
Thank you.
If you need to reach Scott, how would they reach you?
Best way to reach me is our main office line. If you need to get somebody pre-qualified, is 352-282-3020. And for any realtors who just have general questions like we're talking about here, that's kind of my bread and butter. So just give me a call on my cell, and that's 352-207-5019.
All right. Thank you so
much,
Scott.
Have a great day, everybody.
Bye-bye.